Nebius Group delivered huge news for investors as it elaborated on its 2025 strategic focus areas. Investors should know these things before they consider buying or selling Nebius Group stock. I'll discuss in greater detail those latest developments, so let's get right into it.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So looking ahead to 2025, Nebius Group said it had three basic strategic focus areas. The first is their unique full-stack AI technology. So in addition to their European data centers in Finland and France, they started deploying GPU clusters in Iceland and in Kansas City, which was the first capacity in the United States for them. They will soon be announcing their first US data center that will be built to their own design, custom designed according to their own specifications, and they will continue to enhance and expand their AI cloud and inference as a service platform. So the category that's most in demand right now is data centers optimized for AI. So for Nebius Group stock investors, it's good to see that the company is adding more capacity. There's been constraints to capacity. The difficulties have been in finding reliable power sources and in securing enough of the GPUs that go into these data centers, and of course NVIDIA being the most popular GPU that goes into these data centers. And that's an advantage that Nebius Group has with the relationship with NVIDIA, NVIDIA being one of its investors. And so, of course, NVIDIA would be more interested in giving Nebius Group priority treatment in receiving their GPUs because NVIDIA has a stake in the company itself. So their second area of focus is to raise more capital. Nebius Group sees a massive opportunity ahead, and they want to invest to capitalize on that opportunity. This is a capital-intensive business model. Building these data centers is going to require billions of dollars of capital, which they don't yet have. The company saying at the end of last year, they had $2.4 billion in cash, including the $700 million they raised in the fourth quarter from high-quality investors, which of course included NVIDIA. But this isn't enough. The $2.4 billion they have is nowhere near enough to facilitate the growth ambitions the company has. So they are going to come back to markets and ask for more capital. They did say they're going to do this strategically and opportunistically. So don't be surprised if you see Nebius, the stock price, soar. And right after the stock price soars, if they make an announcement, they're going to sell shares of stock to reap the benefits of that higher stock price. So what that means for investors is there could be a limit to the upside in the near term for Nebius Group stock, because whenever there is like a big stock price increase, they're going to capitalize on that and sell shares into the market. That's what I'm speculating, right? That's not for sure, but they are saying they need more capital. And they did say they're going to raise capital opportunistically. And so it's reasonable to infer that's what they meant, opportunistically. For the company, it benefits them most when they sell their shares when the prices are higher, right? So if there's a big pop-up in share price, that's the opportunity to sell their shares at that higher share price, because then the company will get more money for selling fewer shares, right? When the share price is crashing, that's not a good opportunity for the company to sell shares. And so it's reasonable to infer what they mean from their statements that they're going to sell shares opportunistically is when the stock price is higher. Of course, they can also borrow money. They don't need to just sell shares of stock. But at this point, early in its life cycle, the company will more likely sell shares rather than borrow money, because the interest expense they will have to pay will be relatively high, and they don't want to bring themselves lower with the added interest expense on the income statement. They are already in need of capital, and so they don't want to have to pay an interest expense every quarter. They would prefer to raise capital by selling shares of stock and diluting shareholders in the process. So they went on to say that they're particularly focused on their sales and marketing and customer support teams. Remember, this company came to existence in a relatively short amount of time, and they were even surprised at how quickly they got the company up and running as a publicly traded company. They're still lightly staffed. They still need more people, and particularly in sales and marketing and customer support. So in the most recent quarter, they made great hires from their industry, and they're looking to hire more people in the upcoming quarters. So if you're someone that has skills in this category, um, Nebius Group is hiring. Send them an email, visit their website, see if they've got something for you, because they are growing rapidly and they need people. And so I wouldn't be surprised if they hire in abundance over these next few quarters. They also gave us an update to their other business units, right? AV Ride, which is their autonomous technology platform business, signed a contract with Uber as one of just 3 autonomous technology partners in the US, along with Waymo and Cruise. Uber Eats has already deployed AV robots for food delivery in Austin and Dallas, Texas, and then in Jersey City. AV Ride also signed a contract with Grubhub, which now uses AV Ride robots for food deliveries for college campuses across the United States, starting with Ohio State University. This is a growing category here, robots for food delivery. Here in Los Angeles, we have Serve Robotics, which also has a deal with Uber Eats. I see them all over the place around where I live. They are delivering more and more items for Uber, and it's because the cost of delivery for drivers has been increasing. So restaurants and Uber increasingly is looking for other options to lower the cost of food delivery. And this is a category that customers would prefer also, because that would lower the fees that they have to pay for food delivery, and they get more reliable deliveries compared to people delivering the food, which oftentimes can be unreliable. Depending on the person, you might get an order delivered on time with the food still being warm, or you might get an order delivered late with the food delivered with the mess everywhere, the drinks spilled and the food everywhere. And so this could be an interesting category, and it fits in line with the artificial intelligence technology that Nebius Group is developing. Of course, you need a lot of data, you need a lot of AI capabilities to be able to deliver food, deliver items with robots. So this is an exciting category as well. Interesting company, Nebius Group. Of course, a lot of people are interested in the company because NVIDIA has invested in Nebius Group, but the company itself delivering solid results in a category that's in significant growth mode right now. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.